Hello and welcome to Hardman Talks. I'm Larissa and I'm with Hardman & Co.'s Renewables analyst, Nigel Hawkins. Nigel, thanks for joining me today. How are you doing?
My pleasure. Yes, interesting times.
Very. So Nigel, you've just released your latest note with a focus on the UK's 9 quoted infrastructure investment companies and the 22 Renewable Energy Infrastructure Funds. And in the note, you're assessing both the share price performances during 2023 and the key issues, including interest rates, inflation, and power prices. So it's been an unbelievably tough period for the sector, with a difficult macro backdrop and no listings in 2023 either. So let's dive in and see what's been happening. So what has the impact been with higher interest rates, and what has it had as an effect on the sector?
Well, if you look at the 2023 share price performance for the various stocks, they have been pretty depressing, quite frankly. And it's been what I call an annus horribilis for most of the companies in the sector. In some cases, we've seen share price falls of over 30%, which for trusts like this is pretty unusual. The key situation is interest rates, as you mentioned. The bottom line was that last year, for much of it, investors could earn over 4.5% on 10-year gilts with no risk whatsoever. So for companies like this, they need considerably higher yields to justify their investment. And the bottom line is that many have seen their share prices fall quite markedly. And in fact, out of 31, not a single one was able to report an increase in its share price during 2023.
And what is the total value of the 31 investment funds under review? And how is it split between infrastructure investment companies and renewable energy investments?
Well, the stocks are essentially divided into two groups. The slightly larger group are the Renewable Energy Infrastructure Funds. They are worth of the order of £13 billion. And the remaining 9 companies, infrastructure investment companies, many of them well-known names like HICL Infrastructure, etc., they're worth of the order of £12 billion. So in total, we're talking about not far off £26 billion in terms of value. And it is noticeable, actually, over last year, the bigger ones have done rather less badly, shall we say, than some of the smaller ones, some of which came to the market in 2021, and have really struggled to establish themselves both commercially and indeed amongst investors.
Yeah. And have the 31 funds managed to hold their nominal dividend payments?
The dividend situation is actually quite interesting. Many investors really do like good, solid and reliable dividends. And this was one of the reasons that drove many investors into the sector. Many of the yields now, in some cases, quite solid companies, 6%, 6.5%, 7%, like Greencoat UK Wind, who's got a very impressive dividend profile at present. And the bottom line is, out of the 31, very few have actually cut their dividend, but equally many have kept their dividend in nominal terms, which when you've had inflation as we've had in recent months, there's actually a real cut in the dividend. But there have been some casualties. Asian Energy Impact, based in India, has had a really difficult time. Shares have now been suspended since April 2023, so there are real concerns about the future of that company. 1-2 others have also had shareholder votes saying, look, should they continue? And in the case of one, the answer seems to be no, and the company effectively has been wound down by selling off the assets. And that is Aquila Energy Efficiency. So it's a challenging time for the ones at the bottom of the pile. The ones at the top of the pile, like Greencoat UK Wind, like, for example, INPP, BBGI, and HICL, things are going fairly solidly, although obviously they'll be looking for share price increases this year rather than the cuts of last year.
And what about raising capital? Have there been any significant fundraisings in 2023?
Well, that actually is quite a salient point, because in 2021, there was a lot of fundraising. We had quite a number of new stocks coming to market. 2022, the answer was no newcomers. Yes, there was some money raised. In 2023, virtually no money was raised amongst 31 companies in terms of equity, apart from 3i Infrastructure, which is rather different from the rest, rather higher risk but equally they've done very, very well and provided their investors with very good returns. So if you strip out the 3i infrastructure fundraising, there was only one other fundraising around £50 million. Many of the smaller ones would love to raise money, but at present, given the interest rate environment, given frankly pretty depressed sector, and given the fact that many are actually currently trading at a significant discount to their net asset value, means that fundraising is very difficult indeed.
Okay, you've just touched on this, but how many funds exactly are trading right now at a discount to their NAV?
To be blunt, it's easier to answer the question in the opposite direction, namely that none are currently trading at a premium to their net asset value. Everyone is trading at a discount. In some cases, very big discounts. There's the case of Digital 9 Infrastructure. That is doing so badly at present that its discount is close to 70% off its net asset value. Yes, it's got major financial challenges. Yes, it had a shocking 2023 in terms of share price performance. But many others are trading at 15%, 20%, 25% discount, which compared with the situation 2 or 3 years ago is very, very unusual. BBGI, for example, one of the better performing stocks that used to have a pretty solid premium of the order of 25% back in 2021, 2022, it's now trading at a discount. So this year, if you assume there's going to be a bit of a turnaround, particularly on the interest rate front, there is some expectation some will move into a situation of trading at a premium. But last year, it was discounts throughout.
Yeah, I think that's great. Let's maybe finish off by talking about any noteworthy sector performances during 2023, maybe both on the upside and on the downside.
We're struggling a bit on the upside, apart from Greencoat UK Wind with its very aggressive dividend policy, which is at the present time very much appreciated, no doubt, by their investors. So they've done extremely well. They're the biggest wind supplier amongst the 31 companies. They only operate in the UK, and they only operate in the wind market. So very, very focused, and as I say, done extremely well, particularly in terms of cash flow generation. The large ones amongst the infrastructure investment companies have done adequately, I suppose, given the very poor performance of the market. But there have been some casualties near the bottom. I mentioned earlier, Digital 9 Infrastructure really struggling and selling off a very large chunk of their business, presumably for financial reasons. We've seen certain other ones, Hydrogen 1 Capital Growth, marketed when it floated, hydrogen is the future, that type of line. That's done very, very badly recently, as have a number of others. So there are casualties. I suppose the situation of Asian energy impact and a major row about a power station in India, that is one where the shares have been suspended. So from that point of view, that's probably done the worst. But there are a number of casualties out there. And if the situation changes in terms of fundraising, I suspect a number of them will be coming to the market seeking funds.
All right. Thank you so much for that update, Nigel. It's much appreciated. To our viewers, please don't forget to like the video. We appreciate your time. Please do share your comments below. Otherwise, we'll see you back here on Hardman Talks next time. Thanks so much.